Sorry for inconvenience. We already finished difference between indirect tax and direct tax. In indirect tax, it is include those taxes which were the liability to pay the tax line on the person who then the shift the tax burden to another individual. It is ultimately the paid for the end consumer of the goods and services. Indirect taxes cannot be evaluated as a taxation or change on goods and services. It may enhance inflation, enhance inequalities, and the consideration to be rigorous. The indirect taxes involve larger administrative costs due to the convenient and stable collection. Major type of indirect taxes include excise duty, sales tax, custom duty, entertainment tax, service tax. So these are the various taxes. And now we also know that today we these all taxes are going to historical because these all are converted in GST, which is gross goods and service tax, uh, GST and service tax, which is SGST, ISK, CGST. SGST means the state government format, and CGST means central government. So the basic is the GST divided into part which will be in central government and state government, which is charged on every indirect tax in one tax, which is GST. In your textbook there is no which is no shown of GST, but you know that the all taxes are now historical, but the all over our economic condition for indirect taxes, it will be charged on levied GST. The basic concept of income tax: an assessee may get income from different sources: salary, house property, business, capital gain, other sources. So the income from each these calculate first and find out the gross total income, and then permission to deduct allowances arising in total income according to section 80C and 280 ATU. Every person who taxable income in the previous year exceeds the minimum tax limit, it is liable to pay income tax during the current financial year at a rate applicable to the current financial year. The definition of important term is provided below. Assessment year means the period of 12 months commencing on the first day of April every year and ending with 31st March of next year. The current assessment year is 2016-17. The assessee is liable to pay taxes on the income and the previous year during the next following assessment year. In previous year, the previous year means the financial year immediately processing the assessment year. The previous year related to the assessment year 2016 17 is 2015 16 and 7. It will be the year in which the income earned to known as a previous year. So this is the definition of previous year. Next to that, the person means individual, Hindu, undivided family, company, firm, association of person. So these are the person. Assessee is the person who are liable to pay tax, any other sum of money under Income Tax Act 1961. So, a form said person including category of assessee, every assessee who income taxable income is previous year exceeding the minimum taxable limit is the liable to pay income tax during the current financial year at a rate of applicable to the financial year, exception of a rule. General income earned in previous year is taxable in the assessment year, but these are the certain exception to the general rule. The previous year and assessment year, they are same. The assessee is liable to assume it same year in which he earned the income in form following cases: income from non-residential shipping company, income from the person levied in India, income of person likely to transfer asset to avoid tax, income from discontinued business. So the total income it will be arrived after making various deductions from the total income under section 80C to 80U. It compute as a basic of residential status of an assessee. So these are important points related to income, total income. So this section will be 2 under section 45 of Income Tax 1961. In next lecture, we can focus on residential status and the various criteria of residential status. So today we stop here. Uh, we meet in next lecture very soon. Thank you.